Morning traders, this is Tony D from easyMarkets in the dealing room here in Sydney. We have an important update today because the market has changed its mood dramatically overnight. A lot of things happened to improve the sentiment and outlook for the euro, mainly that the Italian yields started dropping, and a lot of the Italian parties all came out in support of staying in the Eurozone going forward. And look, this took a lot of pressure off the markets, which was concerned about the direction that the parties were going to head in now, and potentially, if there was going to be a new election, going to be talking about, referendums and leaving the Eurozone, and anti-Euro rhetoric would be heightened. But that seems to be on the back burner. In fact, there may not even be a snap election. They're trying to form a government still, and that could be a sort of a solution to the crisis as seen here. So optimism switched really aggressively. And the market took a lot of profits from this recent selling in the euro, and the stock market surged. In regards to why the euro itself had extra gains against everything rather than just sort of moderate gains, because the euro outperforms every other risk asset as well. You're seeing that inflation across Europe picked up dramatically last month. Now this is not surprising given the recent rally in oil in the last 2 months, but it is surprising in the size of the beat. So German CPI came in 0.4% month on month, forecast at 0.0. Huge beats there, and potentially we're going to see across the board a CPI in Europe edging closer to the ECB's 2% level that really was what their aim was in all this stimulus that they've been doing for the last few years. An important metric for them, probably their most important metric, given that the economy has broadly been recovering in Eurozone. And as we entered the final part of the QE experiment, the speed at which they will raise rates early next year or next year at all, it really depends upon whether the inflation comes through. And so the current pickup in inflation is really important for that debate, and are very supportive for the euro strength. Now, a lot of the debate yesterday was whether the ECB is even going to end QE. Now, ECB did come out yesterday as well and said, look, they're not worried or changing any of their habits on the recent volatility in Italy, and suggested that there was just a political problem and not a market risk problem, and there was no issue with the banks and no issue with deposit flight, and there was nothing to be alarmed about yet. So it's soothing in their confidence, actually. So really, if the Italian situation was to further fade from traders' minds, then the main story will be whether the ECB is going to accelerate their exiting of QE and raising of rates, and that would really help the euro, which has been underperforming dramatically, rebound quite strongly. So the sentiment's changed dramatically. You probably couldn't or even imagine a sharper change in tune than we've seen in the last 24 hours. We'll see if that holds, and if the dips are started to be bought here, then we can talk about a broader recovery for the euro. But day one was very, very positive. Now, the pound and Aussie and all the pairs actually rallied against the US dollar yesterday as the euro led higher. ADP unemployment numbers came in a little weak, meaning that the NFP next on Friday might be a little bit underperforming as well. Remember last month there was a poor headline number, but the unemployment rate dropped to 3.9% for the first time in many years, and that was enough to help the US dollar rally. Very different situation at this point. US dollar's been rallying for the last 4 weeks, and very overbought still, so there's a lot of room left for the US dollar to give back. If those numbers were to come in mixed this month, may not be as clean as last month, where the US dollar could still make gains. So that's an important number tomorrow, but it's looking, given that ADP number, the market's expectations are lowered. In regards to any data today, we do have the capex coming out of Australia just a little while ago. Now, it was slightly worse than expected. So Aussie dollar hasn't been able to continue the momentum from yesterday so far in the Asian session. There is a little bit of supporting data though. The Chinese PMI did pick up a little in May, so that's helping sentiment continue to be strong here. There is a growing fear though, and the biggest cloud now well, the cloud on the horizon that's always been there is approaching much more quickly now. Is the looming threat of tariffs from the US on nations around the world. They had been granted 30-day extensions. That 30-day extension does end in the next few days. So negotiations are getting to the critical part, and it looks like the current trajectory is that a few countries that are pretty close allies of America are going to get those tariffs put on them. These are the steel tariffs, and there's a whole host of other tariffs that are coming. But the tit for tat that may come from the other countries retaliating, if those tariffs do go ahead, while negotiations are still ongoing, but you may see things get a little bit more nasty and a little bit more negative, and that could hurt the risk appetite. So while we are dealing with one fire in the Eurozone right now, the bigger fire that's been raging for a longer time, the other fire which has been raging for another time, for a longer time, is not really bigger than Italy, but is definitely something that can knock global growth and confidence. Is this trade war and US trade policy? So it's something to keep an eye on over the weekend, because that's when there's going to get a lot of headlines there, and something to think about if you are going to be holding positions of the risk assets like Aussie dollar into the weekend. Alright guys, if you want to have a deeper discussion on what is going on in the market, please contact us on the numbers below. Otherwise, keep an eye out on this euro today. Probably the kingmaker. If it was to continue the rally, then everything will. If you're not a member of the easyMarkets dealing room, you can sign up on the link below, and we'll assist you with your trading as much as possible.